To become a home buyer, it's essential to understand the entire real estate transaction process so you don't get tripped up at any point during negotiations or financing processes. A transaction is simply when a seller has something to sell and a buyer wants that thing and they agree to exchange money for the desired item. You do this every day. But because real estate is so big and expensive and complicated, there are several steps involved before you can just hand over the money and get the keys. In this video, I'll give you a brief overview of the real estate transaction process from start to finish. The real estate transaction process begins for you when you decide you're ready to purchase your first home. The first step in the transaction process is to contact a mortgage lender to discuss how much you can afford to buy. I recommend you make an appointment with a local credit union, a large national lender like Chase Bank or Rocket Mortgage, and also a mortgage broker recommended by your real estate agent once you find one. Different lenders charge different fees, offer different interest rates, and greatly vary in the quality of their service. We'll cover that more in the next video. But step one is to get a pre-approval from at least one or two lenders. The next step in the transaction process is not to start looking for homes. After you know how expensive a home you can afford to buy and how much money you have to use as a down payment, the next thing you should do is contact a real estate agent. Real estate agents are experts in their markets and can walk you through the transaction process in their sleep. You'll want to find an agent who is an expert in the specific area you're looking to move to, or you'll want to discuss your priorities with your real estate agent so that they can provide advice about the local area and where they recommend you start shopping. After getting pre-approved and finding your real estate agent, it's time to start shopping. The primary reason to find a real estate agent before you start shopping is that real estate agents are essentially the gatekeepers to home sales. Without an agent, you can't go and see any home unless it happens to be holding an open house on the day you want to see it. When you find a property, either on a website like Zillow or through your real estate agent, you have to work out a time with your agent and with the agent selling the home to schedule an official property showing. Sometimes you can book these in 30 seconds. Other times it needs to be far in advance, like 24 to 72 hours. I'd recommend you view a minimum of 3 to 5 properties in person before you decide to move forward with buying a home. Once you find a home that you want to buy, it's time to make an offer. This is not as simple as just calling the seller and telling them you'll pay $500,000 tomorrow. You have to discuss with your real estate agent the price and terms you want to offer to the seller, and your real estate agent has to write an official contract which contains the offer to purchase the home. Once you and the seller both sign this agreement, that's called going under contract, and that begins the second phase of the home buying process. And it comes with several serious legal repercussions if not done with great care. Very quickly, here are some of the key terms to be aware of when going under contract. Earnest money. That is the good faith deposit that you include with your offer to purchase a home. It usually falls between 1 to 3% of the final sales price, but like everything else in real estate, earnest money is also negotiable. If you violate the contract you make with the seller, you could lose this deposit. But don't worry, there's several ways to cancel a contract to buy a home and receive your earnest money deposit back if you find out maybe, I don't know, the home is falling apart or anything else like that. Inspection. An inspection is exactly what it sounds like. You are legally allowed to hire a professional to visit the property and inspect it for anything that might be wrong with it. If there are serious issues, you can demand that the seller fix them. Otherwise, you can cancel the transaction and get your deposit back. Appraisal. In most cases, unless you're buying in cash, you will need to get your new home appraised before your lender is willing to lend you the money to buy the house. An appraisal is when an independent third party visits the property to determine its market value to confirm for the lender. If the appraiser says your new home is worth less than you're paying for it, this can cause some serious issues with the transaction. Closing. Closing is the day everyone's waiting for. The closing is an event that takes place typically at a title office, which is the company that deals with the legal paperwork required to transfer the ownership of the property from the seller to you. At closing, you will have to sign a ridiculous amount of paperwork that says you agree to purchase the home based on the specific terms with the seller, your lender, and the US government, of course. After you and the seller finish signing everything, you get the keys to your new home and the deal is considered closed. Once you're under contract, unless you're buying in all cash, your lender will require you to purchase homeowners insurance. There is a wide variety of different homeowners insurance policies available on the market, so I'd recommend you probably take some time, shop around, and ask your real estate agent for advice on which providers to connect with. The policy you purchase will be based on your risk tolerance, and policies and premiums will vary based on how much coverage you desire, but this is not something you should take lightly, and I honestly would highly recommend you spend some time to think through how much you'd be willing to pay for peace of mind in the event of a disaster. Typically, the first big event to take care of when under contract is the home inspection. Assuming you've kept the inspection objection provision in your offer to purchase the home, after reading the report that your home inspector provides to you after visiting the home, you're then able to formally request that the seller fix any issues with the home that you've deemed unsatisfactory. The seller will then basically have two choices if they'd like to continue with the sale. Number one, fix all of the requested items, or number two, offer a counter agreement to settle the discrepancy. It's very common for a seller to offer a price reduction to settle the inspection objection, rather than spending a lot of time fixing several issues with the property. Alternatively, the seller can also just say no and try to settle the discrepancy that way, at which time you'll have to decide if you'd like to move forward or cancel the deal. Remember, it's all about negotiations. After you settle the home inspection, you will have to settle all of the loan details with your lender. Lenders will be requesting a lot of documents throughout the transaction, and they will also require you to schedule a home appraisal. An appraisal is when a lender sends an independent third party to verify the value of the home so the lender knows they're lending on something worth what it is being bought for. After you've given the lender all the information they requested and the appraisal has come back approving the home to be loaned on, you will receive your final loan approval, meaning that the property can move on to the closing table. Finally, everyone will agree on a date and time to hold the closing, at which point the title company will initiate the official transfer of the title, which just means the transfer of the legal right of ownership of the specific property via a deed, which is a legal document that is used to transfer the title from one person to another. After all the final paperwork is signed, funds have been transferred, and everything has been recorded and verified, the transaction is now over, and you are a homeowner.